you so much for stopping by. Today we're going to be talking about MMAT. Yeah, today's price action was pretty interesting. So let's just go ahead and dive right in. We did end up touching the 1.618 right at $1.35 that we were talking about yesterday. Oh, and by the way, if you notice that the audio is a bit crystal clear today, that is because my wife is taking care of my toddler right now. They're right outside hanging out while I am in my home studio where I have the pleasure of having a really fast computer and an awesome sound setup in here. So BBIG actually didn't get this. MMAT, you are getting it first. So show of hands for that. Yay. Okay, anyway, so let's go ahead and continue. So yeah, we did get the touch that we were looking for at the $1.35 level, 1.618, and we did reverse as well. Now, it looks like we came back, and well, we can actually look at this in a smaller time frame. Let's look at the 4-hour and see exactly what happened. Okay, so yeah, we reversed back to the inverse golden ratio here at the 0.618, and that is 94 cents. So it looks like we came up, rejected this, and came back down. Or actually just the new candle started right here and continued its way down. Raw price action is actually telling us that we're going to be coming down even more. So without looking at an indicator, without looking at anything else, I can, more or less see that we can come back down to the knot 382 here at about 85 cents as a first stop. We can actually even bounce from here and test the 0.618 as a resistance level, and eventually come back. Yeah, and eventually come back to the knot 236 right here at 79, which is confluent with our broadening descending wedge support level. So this line has now been converted into support since we did break out. I drew these numbers here. I'm sorry, I actually put down these numbers here earlier just before I started speaking right here, just to show you guys that how the golden rule of three kind of works in these textbook setups. So as you can see here, we have the first test, we have a second test, and a third test. We come back for the reaccumulation or consolidation period like we spoke about yesterday, followed by a breakout. Now, what we talked about was the likelihood of us going, to the 1.618 and retracing to actually validate our newly converted resistance into support. I apologize if you can hear my toddler in the background crying. I don't think he wants to eat. So, yeah, sorry about that, guys. So anyway, yeah, it looks like it's on a trajectory to try to validate this as a valid support, so that we can be able to continue our move to the upside. Let's look at these notes right here to see what we are missing. Okay, perfect. So, let's see. I want to go ahead and compare some formations right here. So this is going to be, let me go ahead and change the chart. Okay, so this is a 12-hour descending broadening wedge that we're in for BBIG. So not necessarily in, we actually already broke out. So we have test number, this could be actually test number 1, 2, 3, and 4. Yeah, so we have test number 1, test number 2. This is a massive number 3. We come back, we consolidate, we accumulate, and we break out in number 4, and we retrace to test this as support and confirm it. And now we're just trading sideways, consolidation right now, and it's going to do whatever it's going to do. But usually these formations present a trend reversal. So this is This is another example of one that I've been looking at for quite a while right now, and you can definitely see impulsive moves on it. But if it's not done at the right time, then they're likely to fail. I'm gonna go ahead and show you guys also. Just by the way, this is just raw price action. I'm not looking at indicators. I'm not getting ideas from anywhere else other than just looking at the chart and recognizing the setup from so many charts that I look at all the time. That's kind of how I do my thing. I tend to just look at as many charts as I can so that I can be able to understand its character and how that particular ticker moves and what it does. Because there's a different psychology per company, per ticker. They don't all move the same. Yes, a lot of them tend to follow or fall susceptible to the movement of an indice or the broader markets. I meant the indices or broader market spectrum. Yeah, but how they react, the different supports, the different resistances within the trading period or whatever time frame you're looking at, they more or less respect those areas and will hold if the indices fall too much, or they will only rise to a certain level even if the index is rising higher and higher and higher. So that type of price action is what I like to study, and that would be considered my discretionary side of trading. My systematic side is to test historical data of whatever ticker that I'm trading. So yeah, anyway, that's how this descending broadening wedge kind of typically works as a textbook setup. Let me go ahead and show you guys the inverse of the descending broadening wedge, which would be the ascending broadening wedge. And the ascending broadening wedge is a bearish formation, as you can imagine. So, and this is particular to AMC. This is actually very textbook. You have the first test, the second test. Sorry about this. Let's just get rid of that. You have the third test on the top. The why it's 1, 2, 3 on the top, it's because you need at least 2 touches of the resistance in a formation to be able to confirm or validate that you are in fact in that formation. The third test was entirely failed, but inversely, we're speaking inverse action here. So this is a bearish setup. So we're actually counting the bottom, not the top. So we have the first test, the second test, third test, and we have the fourth breakout retest of the bottom. This is now the conversion of the support into resistance. So we have to come back and validate that it is a resistance. Short positions open, long puts open, and you come back down all the way to where you can see the genesis of the trade or of the formation. So this actually dead cat bounced here and eventually passed it, and it kept on touching this area. But yeah, usually the area that's the price objective for ascending or descending or broadening wedges in general is usually its genesis, the beginning of it. And this was perfect. And actually, I was calling this out. I was trying to tell Trey too. I was trying to tell Tony Denaro, the Massalorian. I was trying to tell these guys like literally when we were like over here. I'm like, you guys, this is a textbook setup. What are you talking about? You don't know which way it's gonna go. Like this, we're gonna sell off. And people were telling me, you really think it's gonna go down to 683? I'm like, bro, of course it's gonna go to 683, man. This is so typical, and not everybody's looking at these formations. A lot of the times these formations are kind of silly. I don't really tend to call out the formation unless historical data backs it. Like head and shoulders and inverse head and shoulders, those are all really silly patterns, but we have to factor in the psychological component that kind of drives them. So anyway, you guys, let me go ahead and look at these notes right here and see where we're moving on to now. So yeah, let's go ahead and gain bias and direction for MMAT. So let's go ahead and look at RSI. So of course, we're going to go ahead and start with the immediate short-term timeframes in order for us to be able to gain that bias and direction. So right away, this is the 30-minute time frame, and it's So this is the bear weakness percentile, and it looks like we're about to jump into bear strength. So for those of you who are new or who really don't know what I'm talking about when I mean with bear strength or bull weakness or bear weakness, this is my custom RSI. This is the ARC RSI here. So the way I designed it was is that I wanted to be able to have you know, kind of a line at around the 40% decline, and then in the ascension, I wanted to have it around 60%, so that I can be able to distinguish when we're in bullish control or bearish control. So this entire area right here is the bearish control zone, the entire area. Now, the area above it, yep, you guessed it, it is the bullish control zone. Now, it's in the between that really, you know, kind of separates these things. So this area here, we're going to just go ahead and mark it as red. We can't even do that because we're overlaid or whatever. Okay, anyway, so this area here is bear weakness. This percentile here is susceptible to being taken by the bulls up here. Now, the box right above it here, this is the bull weakness, and we have bull strength and bear strength. So when we're in these areas here of the bull or bear, that's for sure areas to where we're more likely to be drawn into lower levels or higher levels. This is kind of a nomad's land right here. It's just signifying, or I'm sorry, this is just signaling us that we are potentially going to do something if, you know, whatever criteria meets. So yeah, anyway, I just wanted to be able to show you guys, just in case you are confused when I'm talking and just saying all these random words and trading lingo and stuff. So, all right, 30-minute time frame is suggesting downside, and it's primed to enter this bear strength percentile. So we can actually look at a smaller time frame to see just how likely that is. 15 minutes is, there's no real bias in direction, but it is below the moving average. So this, we can only imagine that we can see a tiny little bit immediate micro short-term upside, which could be really nothing. Actually, which could be what I was talking about, to retest the O spot 618 at 94 cents, followed by pullback to test the 382 and eventually fail that and come back and test this the converted support. Let's go back to the RSI. Let's look at a 5-minute as well. The 5-minute also doesn't have any bias, although it is slightly pivoted to the downside and also below the moving average. So let's move on and take a look at some larger ones. This is the bi-hourly RSI. We have failed the bull strength percentile. We're in bull weakness with a downside pivot and a bearish cross. So we have crossed below the moving average. Excuse me, guys. Let me just take a sip of water. My voice is getting a little choppy. Apologize. That's super unprofessional. But yeah, so this looks like it's very likely to jump into the bearish weakness percentile here. Yeah, I mean the pivot is weakening a little bit, but I still believe it's gonna come down a bit. Okay, so now let's look at let's look at the hourly as well and take a look at that. Yeah, the hourly is suggesting immediate short-term downside. So, okay, let's go to the 6-hour. This is the 6-hour RSI, and we have made a bearish cross. We are below the moving average, and we have failed bull strength percentile, and we're in the bull weakness. Excuse me. The pivot is still towards the downside. However, it is a little weak, which kind of supports the immediate short-term, upside before it gets rejected by this moving average and continues to the downside into, let's see, some oversold area, like, particularly in the 30-minute. Or maybe the 15-minute. Let's see. The 5-minute is so close to oversold, which makes me feel that we would have that little pump to the upside and continue all the way down into extreme oversold percentile before it just rejects. And this point here would be the point where we're touching the O spot 236 on this level here, testing the conversion of resistance into support right here. So let's continue into a higher time frame. So 6 hour, yeah, the 6 hour is suggesting some downside as well. Okay, let's look at the 8 hour. The 8 hour is coming down from just such a, yeah, it was 82%. The 6 hour was 90%. Wow, that's really high. Okay, so yeah, this is just nosediving right here, and it's in bull strength, but with this kind of action happening, it looks like we're about to make the bearish cross. We're about to cross below the moving average into bull weakness and essentially keep on riding the wave down. But let's look at the 12-hour RSI and take a look at some biases here. The 12-hour looks to be a little bit promising right here, because it looks like we're finding support within the bull strength percentile. So that actually makes me curious to see if the daily has anything to say. Okay, the daily has not rejected from the bull strength. That's a pretty good sign. It's still, on a nosedive, but that doesn't mean that it can't retrace. Buy daily is within the bull weakness. Let's see a 3-day. Okay, so the 3-day is postured to the upside, and so is the 5-day. Okay, so this makes me, all of these indicators joined together makes me feel like this, let's see how long we've been in this trend. So from this candle here, this was July 18th to the breakout of when? October 12th. So this is a 3-month accumulation, so that we can be able to start changing the entire trend of how MMAT has been trading. So this is the sorry for the stuttering, you guys, but the larger time frames are suggesting a continuation to the upside, and the larger and the smaller to medium term time frames, like the 6 hour, the 4 hour, being positioned to the downside, makes me feel like this is just a temporary pullback, which is confluent with what we're talking about here, about testing the newly converted support before continuing to the upside. So if I were to be able to find, if I were to, suggest, please not, this is not financial advice. I'm not an advisor. Do your own DD, that whole jazz. So if I were to suggest entry, it would probably be at about 79 at the O spot 236, and we could essentially, see, I'm gonna just draw a horizontal line here and follow the line up and down as I move, particularly in this zone, so you can be able to see what my targets are looking like. So if we were to do it first at the 79 cent, this could be my largest entry here. So if I was going to average down, I would, because bear markets have wicks to the downside, so we could look. Wow. Okay, so this area is very tight. So 79. The entry range for the first entry would be 78 to 79 cents, right within this area here. So we can actually draw a box and just put it across like this. That would be entry zone number 1. If we wick down, it would be because we have a gap to fill, and that gap is right here. And sorry, I didn't mention this earlier, you guys. I just want to be able to just get to the point, right? So usually when we have gaps, let's see the range first of all. The range of the gap is 75 cents. Oh man, it's within a cent. Okay, so 75, 73, it says right there 0.7573 all the way to the right here where the prices are being labeled. So 75.73 is likely a place to where we can actually wick and reject. We may not actually close this gap. I mean, first of all, gaps do not have to be closed by law, but or by any rules in trading. These gaps never have to be full. It's just that we're on our way down, and if we're gonna do it, then might as well just cover it, right? But usually, when we have gaps like this, we tend to test the support of the gap, or or the top of the gap, and then continue. But because we're so close to this newly converted resistance into support from the wedge, we may not actually close it. We could actually just touch it and reverse right away, and then continue just testing this thing until we leave. Unless we just do a few sessions of sideways trading until it touches here, we close it, and then we take off. So the entry number 2 would be 75.73 to 75.08. Man, this would be a real stretch, but having a third entry here just in case it does wick down this low, our last entry could be 72.94. So 72.94 could be the bottom entry, and we may not actually see it unless we actually fail the descending channel, and then convert this back into a resistance, and then touch, and then continue our way to the downside. But the larger time frame indicators are not suggesting that. One more thing we're going to look at here for this chart is the hourly, and this is part of the ARC series indicators that I just released, and it's in partnership with Cripstex Trading, and I'm going to show you guys 2 of them right here that are also going to validate our downside thesis. So this is an indicator that is based off of some very close proximity exponential moving averages, so that you can be able to catch a movement and waves. Exponential moving averages in comparison to simple moving averages just means that exponential moves closer or ties closer to the price movement than simple. In this case, we have a bunch of small moving averages put all exponential and put very close to each other, so that we can see how price moves. Now, the beauty of this indicator is that it gives you signals for buy or for sell, so long and short. I don't use this indicator entirely for my trade, but it's pretty accurate. See, we got a short signal right here. We sold off to about 65 cents from 67 cents, and it rose, and it gave us a long signal right here in which it didn't let go until, wow, not bad. So it gave us a long signal, and even though we had a retracement here, it still didn't tell us to short. It continued all the way up to here. So that wow, that's actually really good. Let's see. Let's just say from here. So that long signal gave us pretty much a 100% trade. And as soon as it started failing, we have a short signal right here, and this is what I mean by validation of the short-term downside thesis that we're looking at right now. The short signal came up, and an arrow is also pointing down here. We're starting to see some red indications right here in the moving averages. Oh man, yeah, this is validating some downside for sure. As you can see, the teal blue, we have the warning signs turning into yellow here, that there's a potential drop coming in. Red candles come in. Now we have the red border candle with the cyan color or blue color, and it sells off, right? So now we're starting to get these. All these are just warnings, right? But still, we have a long signal. And here they're starting to turn red, and now we're starting to see that cyan color again with an arrow pointing to the downside. This is where we are right now, and still not giving us a long signal. So chances are is that we're pretty much going to go down from where we are right now. Now this is the ARC enhanced MACD. This is giving us also a bear signal here. So this also has a bear and bull signal, so you can be able to catch the trend before it actually happens, right? So it looks like it's been pretty accurate. So the enhanced MACD also giving us a bear signal in the 1 hour. Let's just check it in the 30-minute and just to see if we're getting the same signal. Okay, we have the short on the 30-minute. We don't have a long signal just yet. We have a bear signal right here, pretty confluent with the armor indicator. So yeah, you guys, I would watch out for tomorrow. I would not gain entry right away. I would probably wait until the areas that I told you. So again, those areas are for initial entry at 79. The initial entry range between 78 and 79. The second entry range would be 75, within the 75 cent. And the third one was the one that I spoke to you guys about. I mean, if we even could reach down that low, which I don't think so, it would be possibly right above this candle here, somewhere around the 73 or 74 cent range. But yeah, guys. Anyway, so please make sure to give this video a like, subscribe to the channel, share it, tell some people here. You know, it's important to get the word out in case more people want to learn about the trade. And but yeah, thank you so much for joining me again, you guys, and we will talk soon.